gentlemen, thank you very much for joining me today. It's Allan Labucan here. I'm the founder of the Allan Reports and your host for today's show. Have a special guest, Bruce McLeod, is going to join us. Bruce McLeod is involved with Sabina Silver and Gold. I always mix those two up. Sorry, Bruce, if I mixed it up. I'll let you get it straight. How you doing, Bruce?
I'm doing great. Thank you, Allan.
Is it silver and gold or gold and silver? I always get it mixed up.
It's gold and silver. Certainly our primary asset is the Back River gold deposit, although it does have minor silver credits. The silver is really from our silver royalty that we have on the Hackett River deposit, also in Nunavut.
Okay. So, Bruce, you've got a familiar name in McLeod there. Maybe we should go into a little bit about your family and just bring the audience into sort of, I think it's important to bring that context.
Sure. Well, I guess, I was brought up as, a lot of people in the industry as a mining brat. I grew up in mining towns. I'm third generation in this business. And so, as a child, certainly, spent a lot of time in places like Stewart, BC, which was, a mining community, Pine Point in the Northwest Territories. And, as I like to say, I've really had two jobs. I've had a paper route and been in the mining business.
Well, it's to steal a phrase from your sister, I believe, said it once in the media about talking rocks and stocks at the dinner table. The group I'm involved with, we kind of do that now on a digital sense. Bruce, we have this website that your cousin actually is on, Rob McLeod comes on. It's called chat.ceo.ca. I'm sure you're aware of it because that's Tommy Humphreys from CEO.ca started it. There's plenty of other people on there as well, but it's the same sort of idea, Bruce. There's a lot of real sharp people on there, like your cousin and Tommy and Eric Coffin and Tim Oliver, people like that. There's some really good people on there, and it's a great chat. So we're kind of following that legacy, I guess.
Well, I'm certainly a lot more familiar with it now. I ran into Tommy at the New Orleans Gold Show, and he grabbed my iPhone and made sure that he installed the app and at least gave me a 1 minute exercise on how to use it. And I actually put one reply in, although he told me the room I was in, two people saw it, and I guess that would have been him and me. I am becoming more familiar with it. It looks like a pretty interesting site. And
if Rob can figure it out, I'm sure you can figure it out, Bruce.
Well, I think it was Rob once told me, he said, Bruce, I can't believe that Sabina isn't on Twitter. And I said, what's a Twitter? And he said, it's on a computer. So
he's way out in front of you on the technology.
Certainly.
Cool. So we ran into each other this earlier in the year at the PDAC. It was right around the time that you had jumped on board. We're a little more enthusiastic than normal. Bruce, you're always an enthusiastic guy, but we had a nice brief chat there. Why don't you I'm kind of curious for the audience, what brought you to Sabina?
Well, I was actually approached in December by some of the board members, and I spent several months looking at the company, and to be honest, I think for the first month it was more from the perspective as becoming a shareholder. But what became apparent to me rather quickly was it was a company that was I thought very undervalued. And the first thing that probably turned me off in due diligence was looking at the stock chart. And Sabina in 2011 had a market capitalization, an enterprise value of over $1 billion. And when I was first contacted, it had an enterprise value closer to $25 million. It had $30 million in cash and about a $55 million market cap. And my first assumptions were there must be something wrong. You don't see market caps being eroded to that degree on quality projects without there being something extraneous wrong. The resource didn't hold together, metallurgy, some problems, and so I think I was very cautious in looking at all of those, death nail type scenarios of the company. And I came to the conclusion that really Sabina was more of a victim of its own success, in that in 2011, it was the best performing TSX big board exploration development stock. It was on the JDXJ. The shareholder register was full of generalist funds. The ETFs held stock directly as a proxy to the bigger gold ETFs.
Got it.
And at the time, everything was going right for Sabina. Gold price, at $1,800 US, a resource that had grown, from 2.2 million ounces in all categories to over 5 million ounces of M&I, plus another 2 million ounces of inferred. And everybody was comfortable with the Arctic and Nunavut. And over the next several years, a lot of that comfort with Northern projects was eroded. As you know, Agnico had some real difficulties in construction and their first years of operations at Meadowbank. And Newmont, which spent over $1 billion to acquire Hope Bay, ended up taking a $2 billion write-down on the Hope Bay project. And gold came from $1,800 US to $1,000. And what happened is those generalist funds fled. And I think if you look at the chart, you'll see in December of 2014 what the final death blow really was to the existing shareholders was there was 45 million shares of selling when we came out of the ETF in one single day.
Wow.
And I think the big part was doing the due diligence and looking at the asset and coming to the conclusion that the only thing that was wrong was the equity price was broken. But if you fast forward,
that's a significant concern as well, because you're got a project to develop, so that's going to cost. You're going to have to fund that, and
I think the biggest issue is, looking back and saying, well, what were the causes of that breakdown, and are they valid today? And I think all three of those are no longer valid. If you look at, even where we are today at sub $1,100 US gold, we're still 1250 Canadian. Where gold averaged more like 1475, 1550 in 2011. So we're not that far off the top. If you look at Hope Bay today, it's been recast as a new project. The market cap is over $500 million. And if you look at Meadowbank from Agnico's perspective, in the last full year that they announced results for their project, it was the second lowest priced gold project in their stable, with their cash cost of under $600.
That's crucial these days, the low cost. And I was up in Rankin and in the summertime, or I think it was around August or something like that. No, it was July or mid-July. And it was really vibrant up there, man. Things are flying up there. From the time I landed on the ground and started talking to people, it's quite exciting up there, Bruce.
Well, I think that those of us that have worked in the Arctic can quantify certainly the costs of working in that part of the world. And I think, one of the other things that, I certainly heard a lot was, well, it's the northern discount. Well, the northern discount, I think, applies to resources, reserves, but it doesn't apply post-feasibility, because the whole idea of a feasibility is to quantify the costs of that deposit. And when you compare a project like Back River, and certainly with the recast, what we call the initial project, the 3,000 ton a day feasibility, these are amongst the highest grade gold pits in the world. We talked before about Agnico's Meadowbank mine. Our reserve grade is approximately double that of theirs at Meadowbank. And also, this is a project that has had considerable work completed on it. Between Sabina's work and the previous owner, there's been almost $400 million been put on the ground.
Wow.
8% of our reserve is of our open pit reserve is in the proven category. Again, I think these are the highest grade undeveloped open pits in the Americas. and I've yet to see one actually in the world that's of greater than 500,000 ounce pits of higher grade.
Now, Bruce, I know you to be someone who does your research on the market and your competitors and everybody that's out there. What is sort of the stable of, like, right now, my sort of feeling is that you and I have been through, we've got enough gray hairs to have been through this business for a while. And, we've seen it before where those that are active on good projects, those investors that get in then when things are the worst, and which is, I think, where we are now, are the ones rewarded if their stock selection is good. And so what I've been trying to do with the shows, Bruce, is not just bring on good companies, but also ones that I think can benefit as things get stronger. And as far as your niche in the group of companies I'm looking at, I'm not seeing a lot of really high quality feasibility stage projects. You probably follow up more than I do. How many are out there these days, Bruce, in sort of mining friendly jurisdictions?
Well, if you look at greater than 5 million ounce deposits with high grade in safe jurisdictions, I think with a feasibility that are not in development, the number is significantly less than 10. They're out there too.
It doesn't seem to be, for me, Bruce, regardless of what niche I'm in the category these days, it seems to be that the group in that I would say, let's call them high quality, plays in those various different categories. There isn't a lot of them out there. And that's what kind of really excites me about trying to be the filter for investors out there, and finding these kind of stories that are really early, not being properly valued in my regard.
Well, as a mentor of mine who's certainly seen more cycles than I have, has stated, you've got to remember two things. At the bottom of the market, even the quality projects, they'll trade at $20 or less an ounce in the ground. But in the top of a bull market, those are all traded $100 to $120 an ounce in the ground.
But you can't buy them for the valuations what they're trading for that. So this is when you got to do your homework.
Well, what's even worse than that, Allan, because it's really, if you look at it from the exploration sense, today I think, and it's only getting more expensive as deposits are getting deeper and further from known areas. The cost to discover an ounce of measured and indicated resources today is certainly more than $50 an ounce. Well, if you look at the undeveloped feasibility stage companies, there aren't any that trade at over $50 an ounce. So I guess the question to ask is exploration a good use of proceeds in a market that isn't willing to pay you at least your cost of discovery?
Well, that's a great question. And these days, I always try to focus, Bruce, on the projects that I think are run by people that are paying attention to that. Andre Goumond is a good friend of mine, and I consider him a mentor. And that's one of the things that, I'm always looking for projects that are low-cost projects on the mining side. He really focuses on the cost of exploration and results. And I think whether you're looking at an advanced sort of feasibility stage project or an exploration stage, I think you have to be thorough. You have to be watching every dollar, and these wild shots for out of the park home runs. I don't think that those kind of exploration projects are going to be any good, Bruce.
Well, I think that exploration still, no matter how bad the market, you always have the opportunity of making something where nothing existed. The home run exploration results. But the problem is there's very few companies that in this last cycle have had those sort of valuations. So, personally, I think where the real value is look at the projects that have already had the high risk exploration taken out of them, that maybe have additional exploration upside, but have also got economics wrapped around them. And as I said before, is the number is very few on projects that meet those criteria.
Absolutely. And from what I've been hearing on my rumors from my friends, that yours is one of the higher ones on the list. So that's why I invited you on today, Bruce.
Thank you, Alan.
Like say, so that's a perfect segue into some of the questions that I had from our chat site there, Bruce. And I'll just sort of run over them here. One of them was somebody was asking questions about the Glencore royalty, and I think that that's probably related to the situation that Glencore is or isn't in, or rumored to be in. I was wondering if that has any impact on you guys.
No, again, I think one of the benefits, and if you listen to Pierre Lassonde speaking about royalties, is royalties are forever, and we hold a royalty that is assigned against the title on that property. So regardless of who the owner is, we have that silver royalty. Now, it really doesn't matter in my mind today who has it, because at 80 cent zinc, I just don't see in the short to medium term that project going forward. But in terms of option value, I think that royalty is worth significantly more than I think what the market is giving us credit for today. And in long term, I think that we will see value from.
Now, it doesn't sound like that's a real core asset for you guys.
Well, having a royalty is one of those things that we don't have to keep the claims in good standing. It's up to that is the obligation of the holder. And I think that from a Glencore perspective is they're not moving it forward, so it's probably non-core to Glencore. Well, I'm sure it's non-core to Glencore, and I'm sure that at some point that they'll entertain offers for that asset.
Okay. The another one I got was what's the treasury and the burn rate looking like?
Well, we just put our financials out, and we were just a shade under $20 million. Okay. And we actually have our budget meetings next week. So what we remember is 2015 was a very big year for us. We put out 2 feasibilities. We ran all of our geotechnical drill programs, some significant exploration programs, and the bulk of the work for our final environmental impact statement, which we'll be issuing before the end of this month. So in 2015, with all those things, we spent about $13 million. Our burn rate's going to go down significantly for next year.
Nicely for you guys, Bruce, that was effective work. That's also resulted in a better market value. So, you're definitely going in the right direction as far as getting out there and separating Sabina from the crowd.
So, in terms of our go-forward budget, again, we have our meetings. We have to still put it forward to the board. I won't put a number out today, but what I will say is that without raising additional equity, it'll be very apparent that we could go at least 2 more years if need be, and keeping momentum going.
Perfect. That's the nature of that question. You started to briefly say something about the environmental impact review, or that's an important step along the permitting way. How are things going in that direction, Bruce?
Well, we've been in the permitting pipeline since 2012. We've already had our first round of public hearings with our draft environmental impact statement. Again, the documentation regarding that is available to anybody on the Nunavut Impact Review Board website. We will be putting forward our FEIS. We have an office pool going right now, and what the final page count of that FES will be. And I think the low is around 11,000 and the high is around 17,000 pages.
Well, so I chuckle a little bit there, Bruce, because I've been through the situation in Yellowknife and having an exploration project that had to go through the entire environmental review. It was quite a large document, so I feel you.
Yeah, but as part of it is, I think to be good corporate citizens today is particularly when you get to the level that we are, it's all good work. And I think today you have to show that you can put forward a project without any significant effects on the environment on the long term.
And as far as I'm First Nations myself, I've always tried to be a bridge between industry and the mining industry and First Nations. How are things going in that regard, Bruce, up there? Oh, I'm not sure.
You just we've been working very closely with the with all stakeholders, and particularly that of the Inuit. And I think at last count we were something around 180 separate government and community consultations on the project. So what I can say is we've got excellent community support, and we have been talking with the KIA about the IIBA going forward. And I think that if you talk to both Sabina and the KIA, that I think we're both comfortable saying that there's a path forward that works for all.
Perfect. Well, you know, on that note, I think we sort of put most things in perspective. There was a couple things in your recent news that, you know, you're an advanced project now, Bruce, on the feasibility stages. And in your last news release, you had some highlights there, and one of them was on your exploration surface sampling. And I thought, wow, they're talking about exploration results here. There must be some smoke there. Can you tell me a little bit about that?
Well, I think that exploration essentially stopped on Back River in about 2011, even though the ounce count has grown again from that 2.2 to 5.2 of M&I plus another 2 million of inferred. Yeah, it really was the last several years was drilling out those discoveries that were made in 2009, 2010, and early 2011. And we haven't, as a corporation, really looked at you know that bootstrap geology in a number of years. And you know, one of the opportunities I think we had in a market that wasn't paying for exploration results is to be able to do a reset, to step back, take a look at the generations of data. Remember, this property's been around since the 1980s, even though the major discoveries didn't happen until the last 5 to 6 years. And we were able to put together a number of new targets. And one of the most exciting was the Kogoyak, which was an outcropping discovery. We know it was never sampled before. It was moss lichen covered. And it was actually closer to where the proposed plant is than our two largest deposits, being the Umwelt and the Lama deposits. And this is in an iron formation. You know, the geophysics was done, you know, many years ago. It just hadn't been prioritized. But we did a structural review and saw those same rhyolite dikes that we feel control mineralization, some additional IP that helped us define where to sample. And what we found was an additional very auriferous outcropping banded iron formation. And that, you know, with the ounces that we have, we don't
part of a larger geophysical anomaly, Bruce.
Yeah, yes, it is. Is right now there's about 650 meters of it that appears very prospective. It does continue on either end of that, but I think that's where we're going to be focusing on. So really, the exploration that you know, we're looking at doing and proposing for our budget for next year is looking at more of those targets that at the end of the day, what I think would be advantageous is to take some of those deeper underground resources and defer them until later years with additional near surface lower strip ratio pits. And
that would obviously have a big impact on your feasibility.
Well, you know, I think, you know, look, is post feasibility is once you have payback, these aren't 24% after tax IRR ounces. These are probably a multiple of that in terms of what their IRR is when those will be milled. So I think if you look at both George and Goose, between the two, there's over 50 undrilled targets. What we're trying to do is collect additional information. Wow. And get to the point that we're comfortable in, when we do put the drills back on the property, that we've got a higher chance of success.
Well, it sounds like you're pinpointing there where you want to be using the truth machine when you get it going.
Exactly.
Bruce, why don't we, on closing, why don't we talk a little bit about some of the going forward sort of milestones that you're focused on, and you know, maybe if you think the market's not sort of grasping something, you know, those are the kind of things I like to sort of close on.
Well, I think if you look at, even though Sabina has performed very well against its peers, I think if you look at where we are against what the analysts generally compare us to in our peer group, we're still undervalued on a P to NAV or on a EV per ounce basis. I think we're closing that gap. We still have more to go. But I think really the big thing is that I've been trying to get across is that this is a project that has a feasibility that is fresh, that's used $11.50 gold with an 80-cent dollar. If you look at current Canadian exchange and current gold price, it's still in that within a couple of percentage points of those. There isn't another feasibility project out there that uses $11.50 gold and still shows the kind of economics that we have in today's environment. You know, they were certainly done before the last run up in gold price. So we don't need gold to move significantly higher to make the economics of this project work. We've been through the risky part of exploration. We've delivered a feasibility. You know, we're well down the path of permitting. You know, we will again put our FEIS in this month, and we should have our final round of public hearings in late in Q1 16. And really, the work that we're going to be focusing on now is putting together quality exploration targets, moving the permitting forward, and the detailed engineering, so we can have even more confidence in the economics of the project when it is time to put boots on the ground and start construction.
Perfect. Well, I think you wrapped up the argument very well there, Bruce, for the audience. You know, again, thanks a lot for coming on, Bruce. I'd love to have you on as things move further down the road.
Perfect. Well, thank you very much for having me, Allan.
Well, again, you know, it's at this stage, I'm a little more optimistic on the price of gold. I think that you are going to get some benefits there that will have a little more wind at your back than in your face going forward, Bruce. But I do appreciate that you've used a realistic number on your evaluation. Everybody that knows tells me that feasibility looks really good. So great on you, Bruce. Thanks for bringing your story to our audience.
Great, and look forward to giving you an update as the project progresses.
Perfect. On that note, before making any investment decisions, it's important for you to do your homework and speak with your financial advisors. This is only for information purposes only. Again, do your homework, but I believe SBB Sabina has a project that definitely warrants you taking a close look at. I'm sort of in the building up a shopping list kind of guy right now, and this is one I definitely think you want to put on that list. Have a great day, and we'll talk to you soon.